Hi everyone, welcome back to my YouTube channel. This is Raz, and in this video, we're going to discuss about the concept of costs. So if you're ready, let's start. Before we discuss our topic today about costs, you might be asking, what is costs? And we may have already an idea of what cost is. Like it could be something that we spend on something, or an amount of money that we spend on buying or acquiring things or asset or something that we spend on. It is an amount that we spend for something that satisfies our needs and wants. Okay? So in accounting, according to Kinney and Reborn, costs reflects the monetary measure or value of resources used to attain an objective, such as making a good or performing a service. In accounting or in business parlance, a cost is an expenditure or monetary resources or resource rather needed to produce or sell a product or get an asset ready for normal use. In other words, a cost is an amount of money or in money's worth that we spend on something to acquire goods, to acquire asset, or to produce something that we could sell. Okay? So here are some terminologies that we normally encounter in our everyday lives, especially in business. So we have here profit, and as we know it, profit is something that we gain or we earn after we sell, right? And when we say profit, this is an amount usually we derive after we deduct all costs, expenses from our sales. So profit, mathematically speaking, is computed as sales less the costs. So profit is the remainder or the balance that we will get after we deduct costs and expenses from our sales or revenues. So profit is actually our desired return or the return. This is considered or called a return because this is what we get after selling or after performing a service. On the other hand, sales is the amount of money received and earned in selling goods. When we say sales, sales actually is different from profit because sales is the amount that we get after selling something. It is the gross amount, the gross revenue. So if you are into selling of goods, then the price of that good sold times the number of units of that goods sold, that is the sales, but without deducting yet the costs of that good. Okay, so when we say sales, this is the gross amount before deducting anything from the sales that we have. And when we say costs, this is the amount of money needed to acquire and or make the goods for sale. Before we can make a sale, of course, you need first to acquire goods. So you may have something to sell, right? So whatever amount that you spent on, that you disbursed on to acquire these goods, those are considered as costs. And when you sell these goods, the amount you receive from your customer is what you call the sales. Okay, it's the gross amount that you receive from your customers after you sell the goods. Now, deducting the costs from the sales, you will get the profit. The profit is basically the amount that you will get after deducting in everything, the costs especially, from the sales. Okay, so our focus in this video is all about the costs. Okay, so here are some examples of costs. The cost of materials and supplies used in the production. So if you are into producing, manufacturing your own goods, then whatever supplies, whatever materials, the cost of those, the amount you spent on the materials and supplies are considered as production costs. And the salaries and wages paid to admin personnel. So the cost of labor, the salaries you paid to your admin officers, and personnels. So those are also costs. Also, yes, the costs paid to laborers and the costs paid to utilities such as electricity and water. So those expenses are actually costs. And when you are into production or whatever kind of business that you are in, those things are considered costs. So basically, costs are whatever amount you spent to produce something or to sell something. Okay? So we also have finance costs paid to banks if you have loans, if you have a debt to someone, especially to banks. So the interest that you pay to the banks are also called costs, finance costs. So to better understand these costs, the nature, we need to classify what these costs are. So here are the classification of costs. This list, the list here is non-exhaustive. It's not complete. So, but these are the most common cost classification that we have. Okay, so costs may be classified into different ways. They could be classified according to elements, according to nature or traceability, according to function, according to behavior, normality, and of course, controllability. So again, this list is not exhaustive. It's not yet complete, and you might encounter some of other classification of costs, but definitely these are just some of the most common cost classifications we have in accounting, especially in accounting. So we will begin with cost classification according to elements. According to this classification, costs are classified either as material costs. There are actually three types of elements here: the material cost, the labor cost, and the overhead. So material costs, these are the amount spent on materials and supplies used to produce a product. For example, you are into baking, and then of course, before you can bake, you will need ingredients. You would need flour, sugar, milk, and so on. So whatever amount you spend on these things, the ingredients, are considered as material costs. Material costs because these are the costs you spent on the materials, okay, and supplies, of course. Another type under the elements is the labor costs. From the word itself, labor. So this is the amount that you spent on the labor to pay your laborers. So if you are into baking, so material costs will involve the ingredients, the supplies, the flour, But for the labor cost, it will include the salary that you paid to your baker or to someone that is making your products. Okay, so labor costs. And the third one is the overhead. These are the amount of money that you spent on manufacturing other than labor and materials. So when you say overhead, it's a cost that cannot be traced either material or labor, but they are needed to produce a product. For example, again into baking, when you are producing a bread or a pastry. So aside from the flour, sugar, the milk, aside from the amount that you spent for the wages and salaries of your baker, you would need, of course, some things like electricity, water, which are neither material cost or labor costs. So these are considered as overhead. So any costs which cannot be classified as material cost or labor cost are considered overhead costs. Okay, so examples of material costs are the cost of flour when making bread, the cost of lumber when making furniture if you are into furniture business, and other material supplies that you need to produce a product. On the other hand, for labor cost, of course, it's the wage of a laborer, the salary of a personnel, and so on. And for overhead, these are the things that cannot be traced either to materials or labor costs, but are needed to produce a product. Example, electricity, okay, used in the production. So those are the three elements. Those are the three kinds of cost under the classification elements. So the next classification of costs is according to their nature or traceability. From the word itself, traceability or traceable, under this classification, we would classify costs whether they can be directly traced or not. So there are just two types of costs according to traceability, and these are direct and indirect costs. When I say direct costs, these are costs which can be directly traced to the product. Example, when you are making furniture like chairs or table, so the wood, the lumber, the amount of money that you spend on acquiring lumber is actually a direct costs. The amount of money that you spend on the nails, on painting, are also direct costs because we can easily see the product or the material used in the production. Another thing is, for example, you are into a baking or a restaurant, and then you have these ingredients, you have this flavoring, so those are actually direct costs. They are direct costs because you can directly sense that these items or these materials are actually in there. The flavoring, the spices, the ingredients are direct costs. You can directly sense that they are in the product. On the other hand, the indirect costs are the costs which cannot be directly traced to the product. These are the costs which we know are needed to produce this product, but we cannot directly see in which part of the product these costs are. So, for example, in a food business or restaurant business, we know that they need fire, they need oil, they need electricity, they need fuel. So, these costs, we know they are needed to produce a product, but we cannot sense them, we cannot see them, we cannot touch or smell them directly to the finished product. So these costs are considered indirect costs. Okay? As a hint, indirect costs are also overhead costs. So actually, they are the same. Everything that is indirect cost, the product, is actually an overhead. So indirect materials, indirect labor, those are all overhead. Okay? The third classification of costs is according to function. Under this classification, costs are classified into three. So first we have production costs. So production costs are the costs that's spent on the production or manufacturing of a product. So it's just actually common sense that when whatever costs incurred in production are all production costs. The cost of materials, the cost of labor, the overhead are all production costs. Okay? So, whatever amount you spent on production, they're all production costs. On the other hand, the second one is administration costs. So, these are the costs not incurred in the production but are incurred in the administration of a company. These could be the costs spent on formulating business policies, directing the organization, and controlling the operations. So these could be example of these costs are the salaries of the manager, the salaries of the accountant, or taxes. So those are administration costs. Okay, so everything you spend on the administration or managing the entire business are all administration costs. For production, production costs. And the other one, the third one, is the selling costs. So these are the costs incurred to create and simulate demand and secure orders. So the advertising, the marketing, logistics are all selling costs. Whatever cost you spent on to produce, to sell rather, to sell, market, create demand for your products are all selling costs. Okay, so those are the three types of costs under the classification according to function. So costs has this kind of behavior. Costs are likely to be dependent or independent to some variables within an organization or within the production. So under this classification, costs are classified into three. They could be fixed or variable or mixed. So when we say fixed costs, these are costs that generally remain unaffected by changes in the volume of output or sales. There are costs in the production wherein no matter the level of units produced or sold, these costs will remain the same. For example, the rentals or the depreciation of equipment. So these costs will remain the same regardless of how many units are produced. Whether there is a production or not, whether there is an increase in the production or not, these costs will remain the same. Okay? They are called fixed costs because they are fixed. On the other hand, we have the variable costs. These are costs that vary in a directly proportional way to changes in the volume of outputs or sales. So, apart from fixed costs, there are these costs which depends on the number of sales or units produced. So, for example, the cost of materials. The more you produce the product, the more you would need these materials, right? The more that you would produce, the more that you will need labor, the more that you will pay labor. Okay, so these are variable costs. On the other hand, electricity, water could also be somehow variable or fixed depending on the nature. If the manufacturing process involves automation or machine intensive, then they will need more of electricity. So those are the variable in the fixed cost. Again, when we say variable costs, these are costs that varies depending on the unit of production or the level of production, while the fixed cost will remain the same regardless of the increases or decreases in the production unit. The third type of cost under this classification is the mixed cost. The mixed cost could have the characteristics of both fixed and variable costs. So they're actually semi-variable and semi-fixed. There are these costs which actually somehow fixed but also have the characteristics of a variable cost. I'll give you an example for this three costs. So example of fixed costs is the monthly depreciation of equipment, fixed monthly rentals. Whether you produce something or not, you will still pay these costs. You will still incur these costs, the depreciation in the fixed monthly rentals. And for example of variable costs are the cost of flour, again, in making pastries, sugar. As the units produced increases, the cost of flour and sugar also increases. So these are variable costs. On the other hand, when the production is decreased, then also the cost of these costs will also decrease. Mixed costs, for example, the taxi fare. Upon pick up, there will be an automatic charge of, let's say, 40 pesos or 50 pesos. That is a fixed. But as you go along for distance in time, the longer the distance you travel, the more that you will pay for the variable cost, no? But the 40 pesos charge there, the 50 or whatever the charge there upon pick up will stay the same. It's fixed. So hence the taxi fare is a mixed cost. Also, water bills. In some LGUs, in some districts, water has a minimum payment. So whether you consume this amount or not, you will pay this fixed amount. As you consume more, there will be additional charges, and that is variable depending on the consumption that you have for a particular month or period. And also commissions. There are some commissions which are variable. There are also some are fixed, but also some of the commission arrangement are mixed. So the next classification of costs is according to reporting. Under this classification, costs are classified as either the product costs or the period costs. Okay, so those are the two types of costs under reporting. So product cost, as you know it, these are costs incurred in producing a product. So the cost of labor, the materials, the overhead are all product costs. These costs are also further divided into prime cost and conversion costs. When we say prime costs, these are the costs which are product costs, by the way, which include the direct materials and the direct labor. Okay? But the conversion cost, which is also a product cost, is a sum of the labor cost and the overhead costs. So there are three elements or three types of costs according to elements: materials, labor, and overhead. So these three costs are all product costs. Okay? The sum of materials and labor are prime costs. They are the primary costs needed to produce a product. But the sum of the labor and the overhead are considered the conversion costs, because these are the costs needed to convert the raw materials to a finished product. So the sum of the three is the product costs. Okay? So these costs are also called inventoriable costs. They are inventoriable costs because after finishing a product, these costs will become inventory. These costs will form part of the account, the asset account inventory. So the materials, the labor, the overhead will be aggregated together and become inventories. Okay? when they are finished or completed the production. The other type of cost under reporting is the period costs. These costs are all those costs which are not product costs. Whatever costs incurred which are not related to producing a product are all period costs. So this could be the salary of the accountant, the taxes paid, the interest paid to banks, the charges, and also the office supplies, and so on, and many more. All of those are period costs. Any cost incurred that is not related to production are called period costs, and they are non-inventoriable, unlike the product cost. Okay? The other classification, we have normality. So under this classification, costs are classified whether normal costs or abnormal costs. Normal costs or unavoidable costs are normally incurred at a given level of output under conditions for which that level of output is normally attained. So example of these costs are the production costs which you normally incur, those costs that you normally spend on part of the regular operation are all normal costs. And these costs cannot be avoided at all because this is normal. So the cost that you spend on the salaries, the materials, the labor, electricity, depreciation, those are all normal costs. And those cannot be avoided because again, they are normally incurred. They cannot be avoided. Okay? On the other hand, abnormal costs or avoidable costs, these are costs that are not normally incurred at a given level of output under conditions for which the level of output is attained. So, in contrast to normal costs, abnormal costs are anything that is not normally or regularly incurred in the operation or in the production. And these costs are also avoidable. Examples of normal costs are depreciation, rentals, fuel, taxes, salaries, and so on. These are all normal and you cannot avoid that. These are all unavoidable. You need to pay for this, okay? Unless you are not renting, okay? On the other hand, examples of abnormal costs are losses due to theft, damage, casualty losses, and penalties. These costs are actually abnormal. They are not normally incurred. Losses could be prevented. Damage could be prevented also. And penalties could be avoided. So these costs are not normal, they are abnormal, and these could be avoided. And finally, we have this last classification according to controllability. So under this classification, costs are either controllable or non-controllable. So controllable costs are costs that an entity in an undertaking can influence through their actions. So basically, whatever costs that you can control are controllable costs. Okay? Examples, the cost of materials, the labor, you can control them. Okay? The more you produce, the more you will incur these costs, right? So it also means that if you will not produce, you will not also incur these costs, right? So those are also controllable costs. On the other hand, uncontrollable costs, these are costs that cannot be influenced by the action of a specified member of an undertaking. Controllable costs is actually based on a perspective of a certain organization or department, because some costs are uncontrollable for one department but can be controlled by other department. For example, the salary of the admin personnel who is not part of the production is uncontrollable on the part of the of a production manager, right? The cost of office supplies, the cost of taxes, the cost of finance of interests, those are uncontrollable for the production managers because basically they do not have the controls of those costs because those costs are admin. But these costs, the interest charges, the taxes, the admin salary are also controllable on the part of admin manager. So again, controllability of costs is actually based on a perspective of who is responsible for that costs. Okay? So uncontrollable costs that are controllable for one person may be uncontrollable for another person. Examples of controllable costs are cost of materials and labor. So those are costs controllable on the part of a production manager. The more he produces, the more that he will incur these costs, and vice versa. And examples of uncontrollable costs are the costs beyond the control of one department but may be controllable by higher management or other department. Okay, so those are the types of costs, the classification of costs. So I hope you have learned a lot from this discussion. You have learned about the costs, their classifications, and their examples. Okay, in our next video, we will discuss how to segregate costs. Okay, so thank you so much for watching this video, and I hope to see you in our next video lecture. Bye!